So one of the topics in chapter 10 that we need to talk about is amortization, okay? And amortization from a tax perspective is similar in definition to amortization in the financial accounting world, but in practice, it's a little bit different. All right, so amortization is essentially cost recovery for intangible assets, okay? Depreciation is just cost recovery for tangible assets, okay? And you can see that we have a variety of types of intangible assets. It's important to note that tax treatment of intangible assets and financial accounting treatment of intangible assets is not the same, okay? And so it is a source of book to tax differences, these differences in treatment, okay? So I want to talk about these generally, and we're not going to get too much in the weeds at this level. So here we go. So you've got 4 basic categories of intangible assets, okay? So you've got these section 197 intangibles. You have startup expenditures and organizational costs. You have research and experimentation costs, and you have patents and copyright, okay? Now, I guess unfortunately, each of these items is treated a little bit differently from a tax perspective, okay? So what I'm going to do is talk just basically about each of the treatment, and then we'll look at a chart on the next couple of slides. So I'm going to move things around a little bit just so we have enough room, okay? So what I've done is I've added some verbiage to these section 197 intangibles, okay? So they have a recovery period of 180 months, 15 years, regardless of their actual life, okay? And so they use what's called a full month convention, okay? Now, that should not be confused with startup expenditures and organizational costs, okay? So startup expenditures and organizational costs are kind of what you would expect they would be. Hold on, I'm going to change the font here, and I apologize for moving that around a lot. I'm kind of trying something new out with doing the PowerPoint video in this format. We'll see how we like it. Okay, so organizational expenditures are legal fees, all of your costs related to setting up the corporate structure of a business. Okay, and then startup costs are business expenses related to the startup, the actual operations of those businesses. There is a break point between when do organizational costs end and when do startup costs begin. We are not concerned about that for the purposes of this course, okay? Research and experimentation costs, that is another separate category of intangible assets, okay? And obviously you know kind of what those are, okay? So they can immediately expense those costs, or you can elect to capitalize and amortize using a straight line method over not less than 60 months, okay? So again, you've got some options, but those are going to be different than what you'll see from a financial accounting perspective. And then lastly, you've got patents and copyright, okay? And those are maybe the type of intangible asset that that folks are most familiar with, just from a, they're less exotic than some of the other intangible assets. Okay. And so when you have a patent or a copyright, how it's amortized depends on whether the patent or copyright was purchased or whether it was something that that business created. Okay. And so if you purchase a patent or a copyright, you're amortized over the rest of its remaining life. Okay. If it's self-created, then you amortize over the shorter of the legal life or the remaining useful life. Okay. There are a couple of charts in your books. Here is the first one. And so this is exhibit 1014. And this gives you the recovery period, right? The type of asset that you're talking about, the recovery period, the methodology, okay? The convention. And then it also talks about the financial, accounting treatment, very, very generally speaking, okay? So this chart and then the next one that I've included is also pretty handy, okay? So look at research and experimentation costs that are capitalized, okay? So you can figure out the useful life or not less than 60 months, okay? But for financial accounting perspective, it's expensed, okay? So these are obviously going to be a large source of book to tax differences between financial accounting and the tax treatment, okay? That is all we are concerned about from an amortization perspective in this chapter, okay? We are not going to get into a lot of detail on amortization because there are some very particular nuances and they're very industry related. So it's important for us to understand the big picture with amortization at this point. All right, that's it for amortization. Thanks.